Ladies and gentlemen, good day and welcome to Midwest Limited Q2 FY26 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on the date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Hamsat. Good afternoon, everyone, and welcome to Midwest Limited's maiden earnings call to discuss Q2 and H1 FY26 performance. The financial results have been uploaded on the exchanges. Hope you have had the opportunity to review the same. We have on the call Mr. Ram Kollareddy, Promoter, Whole-Time Director and CEO, Mrs. Uma Kollareddy, Promoter and Whole-Time Director, and Mr. Dilip Kumar, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Ram Kollareddy to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Sana. Good afternoon, everyone. I am truly delighted to connect with you all following our successful IPO listing. Marking a significant milestone, Midwest Limited is now listed on India's premium stock exchanges. This achievement reflects the trust and confidence our investors have placed in us, and we are deeply grateful for your unwavering support. As we embark on this exciting new chapter, we are looking forward to growing together and reaching new heights. FY26 has been a landmark year for us till date. We have successfully raised 451 crores from IPO, and the same will be used towards phase 2 expansion of its quartz facility, electric drum trucks, and solar energy integration at select mines and repay borrowings. I am also 251 crores. I am also delighted to share that Midwest delivered an exceptionally strong performance in Q2 FY26 with EBITDA and PAT growing by 52% and 80% year-on-year, respectively. This remarkable growth was driven by improved capacity utilization, cost optimization, and strong operational efficiencies, which together propelled our EBITDA margin to over 29%. Before I move on to our operational and financial performance, since this is our maiden call, I'd like to take a moment to briefly introduce Midwest Limited to all of you. With over 4 decades of expertise in dimensional natural stone exploration, mining, processing, and global distribution across 17 countries and 5 continents, Midwest has expanded its portfolio beyond granite to quartz processing and is also diversifying into heavy mineral sands and rare earth materials. We have a diversified as well as fully integrated business model from mines to market. We are a leading quartz processor and India's largest producer of black galaxy and absolute black granite. We achieved a major milestone. We are supported by seasoned leadership team, access to diversified mineral reserve base, and a constant strive for operational efficiency. With these, we are on the journey of becoming a world-class integrated materials processing company. We remain steadfast in our pursuit of long-term vision of becoming one of the world's top 3 producers of quartz grit and powder, Southeast Asia's largest producer of titanium feedstock, and among the world's leading producers of rare earth oxides. Briefly highlighting our business segments, being India's largest producer of black galaxy and absolute black granite, accounting for approximately 20% of black galaxy production and 64% of its exports in FY25. It is also interesting to note that Midwest leads in royalty payment in the industry for black galaxy granite. This segment caters to high-value real estate projects with application of kitchen countertops, floor tiles, vanities, etc. Midwest Limited serves as an organized player in an otherwise unorganized and fragmented market. On the quartz processing front, the company recently commissioned phase 1 of its 303,000 metric ton per annum quartz processing plant, catering to solar glass and engineered stone industries. Phase 2, to be funded through the IPO proceeds, aims to double the capacity to 606,000 metric ton per annum. It will also include the ability to produce the plant to produce ultra high purity quartz or its HPQ materials for semiconductor and crucibles applications. India currently imports about 65% of its solar glass requirements, with demand growing at a robust CAGR of 30%. And Midwest, playing its part, aims to cater to around 11 to 13% of the raw material needs of this growing industry. Building on its granite and quartz operations, Midwest is further diversifying into heavy mineral sands, primarily consisting of ilmenite and rutile, which are titanium feedstock materials. And monazite is a byproduct of the heavy mineral sand deposit, which is a feedstock for rare earth materials, especially Nd and Pr, neodymium and praseodymium. We plan to establish a processing facility to extract and process heavy mineral sands, catering to global demand and specifically Indian markets, with operations expected in FY27. These initiatives are intended to support industries such as aerospace, chemicals, automotive, electronics, defense, and medical devices. Our ecosystem also includes in-house diamond tool manufacturing, specifically diamond wire, supporting both internal operations and external customers. Diamond wire not only caters to natural stone industry but also is used in the semiconductor and solar industries. Midwest's competitive edge stems from its strong resource base, sustainability-driven operations, and robust financial performance. Sustainability lies at the core of Midwest strategy, driven by continuous R&D and technological advancements to enhance efficiency, optimize costs, and reduce environmental impact. The company is actively decarbonizing operations through the adoption of electric dump trucks powered by on-site solar installations. Through backward integration, as discussed, we are also backward integrated on the diamond tool front. These initiatives underscore Midwest's commitment to responsible mining, resource efficiency, and sustainable growth. Financially, Midwest has demonstrated consistent growth, achieving an EBITDA and PAT CAGR of 38% and 40% between fiscal 23 and 25, with a 27% EBITDA margin edge in FY25. Moving on to the H1 half-year financial highlights of 26. Revenue from operations has increased to 301 crore, up 8%. EBITDA increased by 16% to 86 crore. EBITDA margins increased to 28% plus. Net debt reduced by 12% in H1 FY26 to 193 crores compared to H2 FY25. CRISIL Ratings has upgraded Midwest credit rating from CRISIL A- to CRISIL A stable, underscoring the company's robust financial health, operational excellence, and sustained growth momentum. Cash flows from operations more than doubled to 125 crores compared to FY25, and working capital day reduction from 120 days to 90 days. 99 days. Yeah. Coming to next 2 years, what we aspire to do at Midwest, the new verticals that we are getting into is rare earth materials, heavy mineral sands, and high purity quartz. And we aspire to deliver 2.5 times revenue. All the numbers are based on FY25 as a baseline, with a healthier 35% ROCE and 3 times plus profitability over the next 3 to 4 years. And our goal is also to reduce the energy consumption and carbon footprint by 15 to 20%. Other developments in H1 of FY26, which are strategic developments for the company, apart from the IPO, which you mentioned. So we have commissioned the quartz plant of capacity, phase 1 capacity 3,000 tons, catering to solar glass engineered stone. We have got permissions for a new Black Galaxy granite mine, which is getting operational very soon, and the development activities are going to start in the next few weeks. We have working capital efficiency improved by 18%, with days reduced from 120 to 99 days, supported by better credit terms and overseas with overseas customers. And more importantly, we also received a letter of intent from KMML, which is Kerala Mines and Limited, for the pilot project of monazite cracking and its further validation within India in Kerala. In conclusion, Midwest is well positioned to achieve its vision, and we remain steadfast in the pursuit of long-term vision in becoming one of the world's top 3 producers of quartz crystal powder, Southeast Asia's largest producer of titanium feedstock, and among the world's leading producers of rare earth oxides. This is our, we will strive in this journey, and we will achieve these goals in the long term. And thank you all from my side. I would now request Umar to take over the next segment.
Good afternoon, everyone. Thank you for your time. Since this is our maiden call, we would like to give you a flavor of our 3 verticals. Coming from granite vertical, we are the largest producers and exporters of Black Galaxy granite. This is available only in one village in the entire world, and we have exclusive mining rights for decades, depending on where the license stands on the timeline. And these are not licenses where you fight for tenders year on year. These are exclusive mining rights, so there's visibility of cash flow coming in the near future. You have visibility of cash flow for the future. And also quality of earnings are extremely strong, because all the sales, most sales are backed by customer advances and also with the LCs. So we do not do any open credit. And this is it's a very fragmented market, and we have focused relentlessly over the years through both inorganic, organic expansions, and we've now consolidated the fragmented market, where we are now the largest producer and exporter of Black Galaxy in India, and we are the largest producers of Absolute Black as well, which is also a rare commodity. And these are our focus is only in the granite is only on the evergreen colors, which are black and Black Galaxy, and not fashion stones which change with time. So this is about our granite vertical, and now as our CEO has mentioned, we've set up a 303,000 metric ton per annum capacity plant, which is integrated plant from mines and the processing plant. This is the largest capacity in India for processing of quartz crystal powder. And in this plant, we process 2 products. This is again the only plant in India which is processing 2 products at this scale, both catering to the engineered stone raw material for the engineered stone slab makers, and also raw material for the solar glass. Now, solar glass we believe is expanding at a 30% CAGR, and from single layer to double layer when it becomes, then we're looking at a much higher CAGR. And as our CEO mentioned, 60% of the glass is imported currently. So we look to substitute that raw material import to local, and plus there is a import duty as well that is levied. So these products also we are well positioned to take the export market as well, because there are several engineered stone plants abroad as well, and our plant is close to the port. And the same plant has two lines which caters to both these industries. And again, we are back integrated. We have the mines. We have 23 million tons of resource from which we get our raw material. So there's consistency in supply for raw material for our plant, and there is consistency in price. And we are removing volatility, price volatility, the timing of supply, the quality volatility from the raw material supply for our plant. Now coming to the third vertical, we have heavy mineral sands licenses in Sri Lanka, where we have we'll be mining rare earth oxides from the monazite, and we plan to forward integrate on this front. Now coming to the rutile and ilmenite, which are feedstock for titanium based metals, lightweighting of metals, or titanium slag, or titanium pigments. We'll also plan to forward integrate on this front, and we are in the process of getting the next stage of licenses and this of permissions. Coming to our technology, we've achieved these cost efficiencies and the EBITDA margins that you had mentioned, the increase in our EBITDA margins over years, cost efficiencies through relentless focus on technology integration. So we don't look for solutions and wait for solutions to come to us. We actively go integrate look solutions which are available world over. We also so some of the examples could be the electric dump trucks, which we currently have in our mines, which are reducing our operation expenses and reducing our plan is to back integrate with solar to further reduce our energy costs, and also increasing our green footprint. So these are ours is definitely the first mine, the granite mine, that has these trucks in play, these dump trucks in play. The first in India, possibly because the larger miners are coming to our mine to see these trucks in display, and that this is an example to show how forthcoming we are for looking for solutions and for disintegrating from the diesel dependency. Which is again increasing our margins. As we keep phasing out all our diesel trucks to electric trucks, which will have a positive impact on our EBITDA margins, is our expectations. We've also back integrated with diamond wire, where the cutting efficiency of the tools are faster, and the tools last longer, which is increasing our production and reducing our production bottleneck. So this is again done with R&D. Now we've got a whole R&D team because we didn't find the right tools in the market. So we've got an R&D team together and perfected these tools for our operations. And now we are using it for captive consumption and also for selling to other third parties as well. So now I would like to have our CFO take over to give you a flavor of the quarter half-yearly numbers.
Good afternoon. Thank you all for joining our quarterly earnings call. We have posted our current quarter consolidated revenue at 158 crore, and against a sequential quarter number of 142 crore and year-on-year number of 141 crore. Our half-year numbers stood at 300 crore, with a year-on-year number of 278 crore. Our profits have been consistent in the last quarters and the half year. We stood at 17.7% PAT and 28% less EBITDA. Against its comparative numbers of 26.45% year-on-year and 15.97% PAT year-on-year. So that's on the P&L end, if we look at balance sheet, we have achieved, we have reduced our working capital days through improving our credit terms with our export buyers. And also, we started using our LCs. We started discounting our bills with non-recourse. This has helped us to improve the working capital days. That's on the working capital front. And our capital gearing ratio stood at 0.38 times now. We are healthy. And our debt is decreased to 190 crore against its 235 crore of the last balance sheet. So, going forward, from the proceeds also, we'll be paying about some 50 plus crores towards the payment of the debt. More or less, we'll be close to around 120 crore debt going forward. The company will have. That's on the balance sheet. Cash flow wise, we are impressive. We have achieved, double the operating cash flows compared to its last years. Now, we'd like to take any of your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Akhilesh Kumar from Emkay Global. Please go ahead.
Yes, thanks for giving me the opportunity and congratulations on the good set of numbers. So, few questions from my end. First one is that how are we progressing on our HMS facility commissioning? Is that the target to bring that in within 15 months still hold?
Yeah. So yes, we are in line with that, and we'll start building the plant next quarter. That's the plan. And as of now, we are more or less in line with that.
Okay, that's good to hear. And the second is on the mostly the market question. So, how does the global and Indian market for HMS and rare earths look like, and what kind of opportunities and risk do we have here?
Right. So, HMS market, primarily the materials that will be generating, if you keep the monazite and the rare earth apart, is ilmenite. And ilmenite is the main feedstock for all the titanium slag, which is then converted to your titanium metal and alloy. So, this market has been there for the last 4 decades, and it has a CAGR by itself. Ilmenite itself has a growing market, and if you look at the producing, more than the growing demand, the producing countries are also getting more mature, like Australia and all these countries. So given that ilmenite has a stable growth, and today most of the countries are net importers, and the overall ilmenite, largest importer of ilmenite in the world is even today is China, and the diversity is increasing. India, if you look at global market CAGR, if it is few percentage, 6-7%, whatever that number is, India will be much higher than that. Europe is much higher than that. So it's getting more distributed. The second major item is rutile, and rutile is directly linked to the titanium pigment industry, TiO2. So wherever you see the paint industry growth, which likely is India is the largest growth right now. So there, Indian market has a better role to play in the rutile market. Zircon is well distributed, and the garnet is also industrial material well distributed. Now coming to the monazite or the rare earth. So last 6 months we have seen a lot of tailwinds in the sector, wherein lot of nations or lot of companies outside China are trying to get access to this. So it is the market for this is high growth. if you look at you can segment the market into two. One is China and non-China resource. The non-China resource is a much higher growth. So given that since our monazite will be the outside will be produced outside China, we look at tailwinds there. We don't want to throw any specific numbers, but I think the demand far outstrips the supply right now. If you even look at the projects which are coming in line. So if you look at the projects which are coming in line globally in this space outside China, one is MP Materials. But MP Materials is a company based out of in US, and US will consume most of whatever comes from that company. Then there's another company called Lynas Rare Earths, which is today as we speak the world's largest rare earth oxide producer outside China, and they are ramping up, but they don't have the resource base to ramp up to the demand that the world is throwing at them. And so I think our project is timely in that nature. In terms of for the HMS, I think if you look at a company called Iluka, which is listed on ASX, there you'll be able to get more insight on the where that business is heading. It's a more mature company and one of the largest in the world producing it.
Okay. And sir, like what kind of risk do we see here? Is there any kind of risk which could rise in because of market imbalance or something?
So right now, are you talking about HMS or the rare earth?
HMS.
Okay. So if you take the rare earth aside, the HMS is, all these minerals are fast growing except maybe garnet. Garnet is more industrial and more cyclical, but garnet percentage is not very heavy for us. So primarily ilmenite, the outlook is titanium market. So as long as the titanium requirement in the world is going to grow, and these industries are coming outside China, though we can export this to any country. We are in line. In terms of the market risk is something that we don't anticipate, but also the advantage we might have is a low cost producer. So situated where we are in, because most of the other HMS projects, if you see large ones, are in Australia, are in South Africa, are in Mozambique, the costs are on the higher side. And our goal is on the cost front also, we will be on quite attractive. So given that, even if there is any volatility on the market fronts which we don't see in a major factor, we will be able to absorb those because of our low cost base.
Okay, and the similar for rare earth would be like, because we understand that China has more of market control there, so how are we placed from that sense?
Yeah, so China's market control is driving the tailwinds, right? So actually, for us, it is helping our project. And we have to also understand monazite is a byproduct for us. Monazite is a byproduct for us in the HMS. So given that the pricing also is on the north. So for example, there is a Chinese index itself which you can look up, which publishes the neodymium and the praseodymium prices, which we are basically the world is after majority in terms of volume. The prices have gone up in China itself. So and the US is paying today. If you look at the agreement between DoD in US and MP Materials, they fixed the price of $115 per kg, which was almost 70 to 80% premium to China's price. So I think in terms of pricing, there's a premium being asked for these resources outside China. And for us, we think the timing-wise is an advantage given that China is being more restrictive, and we will be one of the few projects coming in line in the next few years.
Great. Thanks for that elaborative answer. And sir, my last question is on what do you think that at what scale of production do you believe is necessary to make the project financially viable in the global cost curve for the HMS and both rare earth?
So right from phase one, we will be cash flow positive. We'll be having healthy EBITDA there. So it is never going to be a drain on that front. The issue has been more downstream when you get into making from like we will be producing the oxides, right, rare earth oxides. The issues on margins have always historically been further. So when you make the oxide to metal to alloy, then to your magnet block, then in the fabrication losses based on which industry you're dealing with. So those were more stressed historically. But the world deciding to or psychologically adjusting to the fact that they're willing to pay a premium for the end products coming outside that Chinese ecosystem, I think that problem also will be reduced. But from oxide point of view, we don't see it as a issue.
Right. Thanks. And sir, one last question, if I can squeeze that in also. So once these projects get online in next 15 to 20 months, since we understand that these projects will have a EBITDA margin of north of 35%. So what kind of blended margin we are looking at in, let's say, FY 27 and 28?
So I would like to, instead of throwing a specific number there, I think I already made it in my commentary that in the next 3 to 4 years, we are aspiring to reach that 35% average EBITDA, right? So that's the average, ROCE. And EBITDAs, if you look at EBITDA profiles, I would like to say we are at 28, 29 mark now. And if you look at the HMS and rare earths coming in, and look at the balance sheet of Iluka, their margins are close to 41, 42 right now. So I think we will be quite healthy, and our average is only going to go better.
Okay, that answers my question. Thank you for your time, sir.
Thank you.
Thank you.
The next question is from the line of Vikas Singh from ICICI Securities. Please go ahead.
Thank you for the opportunity, sir. Since this is your first call, can you give us the revenue and EBITDA guidance or the targets for the next couple of years?
So the granite, so if you look at segment-wise, where we are and where we want to be, granite segment, we are looking at a consistent growth, what we have got in the past few years, so that the similar growth. This year we have started adding the revenue from Quartz phase 1, and next year we'll have a full year of that. We will also have a part of phase 2, which is being built from the proceeds of the IPO. So FY 28, you will see both the phases of Quartz coming in, and there 5 lakh tons, close 500,000 tons of production there. And that year you'll also start seeing HMS business starting generating revenue. So given that, I think if you look at a 3-year time frame, and we more than doubling in terms of top line is already built into all these things set in motion on a conservative, on it. So that is something that we are very comfortable with.
And in terms of the margin, if 30% margins, EBITDA margins are sustainable, or should we think that since the quartz and heavy mineral sands would gradually increase, or the rare earth, our margins would keep on improving on these levels?
So margin profile will keep improving with addition of these segments, and in terms of granite, most of the margin is due to whether we are improving our operational efficiency or increasing the green energy aspect, reducing energy costs. So granite is sustainable, but major improvements on the margin profile come from the new additions.
Noted. And sir, since you have a big capex plans going forward as well, so just wanted to understand that the IPO money going partly on the capex, partly on the debt repayment, how should we look our debt profile in going forward, and what is our maximum threshold beyond which we would not like to go?
The capex that we will be seeing in the next couple of years, one is Quartz phase 2 plant and the heavy mineral sands plants. Out of that, Quartz plant is funded with our IPO funds, fresh issue, that's taken care of. And heavy mineral sands mostly will accrue from the internal, it is funded from the internal accruals. Today, we are not very specific in terms of beyond that level we will not grow. We will not take. It's an opportunity that we have in the business. Today, we are at 0.38 times in terms of debt equity. We will take an appropriate call which would help us in terms of growing at our top and bottom levels. But today we'll be at around 120 crore debt.
Noted, sir. That's all from my side. Thank you for taking my question.
Thank you. The next question is from the line of Manav Gogia from Yes Securities. Please go ahead.
Yeah, hi. Good afternoon. Thank you so much for the opportunity. So my first question, I think in your opening remarks, you had mentioned that there's a Black Galaxy, mine. There's only one particular mine in the entire world, and that is based out of Andhra Pradesh, right? If I'm correct.
Yes. So I would like to clarify, there is only one geologically known deposit in the world as of now, and yes, we are the largest miners there.
Okay, you are largest in India, or you have other global players as well?
So this deposit is available only in the Chimakurti village in Andhra Pradesh. There is no other known deposit that is available anywhere in the world. So it's already been a few decades that several miners are mining this product, and it's used the world over. So if you see it used in Australia, US, Middle East, Asia, anywhere, we have more than 60% export market share. So it is most likely, there's over a 60% chance that it's originated from, our efforts.
Got it. That is helpful. Just follow up on that, since we are targeting the export markets and in particularly US, are there any impacts of tariffs which might have come onto the sectors? And if so, what would those impacts be, if you could just quantify?
So I would like to make a correction here in the question. We are not, US is not a major market at all for us. In fact, it's a very insignificant piece. For us, we have a large domestic market, and also in Asia and the Middle East is our markets. So essentially, our customers might resell in the wholesale or retail distribution to the US clients, but my understanding is less than 2% of granite ends up in the US.
Okay, yeah, got it. And between the export sales and domestic sales, what would be the share roughly 2:1?
Yeah, till last financial year, it's close to 60% was export and 40% was domestic sale. And this composition is changing. That's what we have noted in the past 2 quarters of this fiscal. It will be somewhere, kind of a flip is what actually we have seen. But no, we have to be, observant for next few quarters to establish actually the sustaining trend. That's where we are in terms of exports.
Got it. And in terms of pricing, how are the prices different in the local market, in India and on your exports?
Prices, if I have to explain about the price export, we do normally FOB kind of a shipment. If we do FOB, we end up in paying royalty to the government as a miner. If we sell the product into the domestic market, there are some concessions given by the government to the local factories who take slabs from us and then process the material, the end product. They get some concession in terms of royalty. Thereby, the price in the domestic market is little, advantageous in terms of export. If the market is really picking up, and added to that, there's a GST rate cut, which is further fueling the domestic demand. Okay.
Gain on loss has been reduced from 18 to 5%.
Okay. Noted, ma'am. Ma'am, just on the scheme of the mining, so is it like the other minerals that we have a particular lease period, and what would that lease period be across our portfolio of the mines?
Yeah. Coming to granite, we are operating primarily in 2 states, and the typically overall lease period, we can look at a 50-year time frame, broken up into 25 plus 25 in one, or 20 plus 20 plus 10 years. Also in both in some mines we own the pata lands or the private lands, the surface rights also, which means even beyond 50 years, if you want to operate that mine and you own the surface rights in those mines, you can apply for the lease and get, because surface rights have an advantage. And it's coming to this is for granite, and for quartz, it's a major mineral now, and the government of India prescribes a single lease period of 50 years, 50.
Okay. No, that is helpful. So my second question, is in terms of your IPO proceeds, you're using it for doubling the capacity. Could you state how much of the proceeds have been utilized till now?
Yeah. See, we are in the phase utilization because it's mainly meant for capex. We are collecting quotations, validating, doing final round of negotiations. That is expected to, a portion of it is expected to be completed by end of this month, and we'll start applying, releasing some advances and orders and the advances. And that in terms of a major chunk, a considerable chunk is going towards repayment. That will happen this week. That repayment.
Got it. That is helpful. And the planned timeline for the capex is up till FY 28, right?
Yes.
That is when the numbers
FY 27 is quartz plant 2. And there is some solar and these things might slip into other finance.
So broadly, if you're looking specifically on the capex that is being delivered from the proceeds of the IPO, most of that will be done in the next 12 to 15, within next 12 to 15 months.
Got it. That is quite helpful, sir. Really, thank you for the opportunity, and all the best.
Thank you.
Thank you. The next question is from the line of Prateek Singh from DAM Capital. Please go ahead.
Hey, hi. Thanks for the opportunity, and congrats for a good set of numbers. The first question is largely on what kind of volume growth we saw in the first half of granite on a YY basis.
Yeah, volume, we have grown close to the 6% plus volume is what we have seen, and we are going to add 2 more new mines this fiscal. That will further contribute to the volume growth.
So that will contribute to lead to a higher volume growth in 26 itself?
Not significant, because it's a partial year. That's we can't have a significant number over there.
So Prateek, regarding the production, yes, it's going to increase, and we have another mine, Black Galaxy mine, because it's exclusive mining rights and it's a premium material and all that, and that's going to start. Development costs have already started, development efforts have already started. So production will start on that front as well. So production should increase from that. Our working capital days are reduced drastically. The health of the quality of the earnings has improved. It's gone down to 99 days. And we endeavor to get it down even further. There's been a cyclone, and there's been slight flooding into the of Manta, cyclone Manta, and a little bit of flooding. So there's temporary disruption in production, which we will be enduring to make up very soon.
Understood. Thanks. And the second question is, what kind of utilization levels are we hoping to achieve in quartz business this year in FY 26?
Yeah. So on the installed capacity, we'll be reaching around 60 to 70% during this year. And next year we'll be doing close to 80-85% plus on capacity utilization.
Okay. So when you say 60-70% for the half year, because in the first half I don't see any contribution. So for the half year, you'll get 60-70%, right?
Yes, within that the capacity of that half year, 60-70% of that, yes.
Understood. And you spoke, I think Ram spoke something about the Kerala project. So if you can repeat it and what exactly is that, if you can give a sense.
Yeah, to give you a background, India has rare earth resources which are lying with several companies like KMML or APMDC in Andhra or another corporation in Odisha, and typically these have been processed by state-owned enterprise like IREL. And Kerala was the first corporation which has come up with a EOI, fluoride and EOI in the market for a private partnership to take those raw crude monazite and process into oxides. And they have gone through their own process, and we have got several companies participating, and we've got LOI from them that we have been technically selected for that project. And we are discussing the details and the MOU/agreement, whatever, in the next few weeks, and we will give you further details once that comes out. So the scope of the project is to take the crude monazite they have stored, which is more than 140,000 tons that they have, and then in the contained monazite will not be that much, and then take that material, build a pilot plant to make oxides, and thereupon build the commercial plant.
Okay, so if I understand it correctly, this is something which you'll be doing with KMML, and you also have monazite in your Sri Lanka operations, which will be a parallel conversion to rare earth oxides. Is that the two operations? Is that how I should look at it?
Yes, that's correct. So the monazite in Sri Lanka is a byproduct, so the cost base is lower.
Understood. And my second question is largely on just a technical question. So in our segmental information in the reported results, last quarter, September 24 quarter, when we were talking about elimination, what exactly is that? Because that's quite a big number in EBIT, 117 or crores.
It's a consolidated consolidation elimination. If we have one subsidiary in our books in the past when that was kind of loss making, and when this was disinvested, the losses whatever were accumulated till then have been added back because it is no more a subsidiary, it is disinvested. So as that is a exceptional line item which has come in some 25 odd crore.
Okay. So when I was talking about the elimination line item in the EBIT, is that the same thing? 17 odd crores in your EBIT segmental breakup for console numbers.
Sorry, can you come again, Prateek?
Yeah, so for September 2024, last year's quarter, where you say segment results profit before interest and taxes, Granite EBIT, it talks about 44 crores, others 2 crores, and elimination is minus 20.
That is excluding that item.
Okay. Understood. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Dipesh from Manya Finance. Please go ahead.
Hi, am I audible?
Yes.
Yeah. Okay. I have joined the call a little late. If there are any repetition of questions, just excuse for that. Wanted to understand what is the payback period of the phase 2 of quartz processing plant, and when will the additional capacity of the quartz be commissioned?
Its payback period is it'll be a forward-looking statement, but no, payback periods are very impressive. If you give payback period of then it's like we will be talking about the EBITDAs that we'll be making. But it's in the range of 3 to 4 years.
3 to 4 years. Okay. And what is the ROE which we are getting from this business?
That is ROE. We have to still see the numbers, but ROEs are close to, around 25 plus.
Right now, the ROEs are around, when it came to the IPO, the ROEs were around 20%.
Yeah. Last fiscal, if you see, there was capex investment in phase 1. That's pulled the number down. There is no started contributing revenues and the PAT numbers this year. Prior to that, it was around 23% is the ROE.
So post IPO, what is the book value?
It's book value in the sense?
The company's book value.
1,000 crore.
Book value in terms of per share?
See, you are talking about the market value or the book value? Book value.
No, the book value.
Book value would be close to. I will have to see that number.
Why I'm asking you this is to help us calculate the ROE going forward.
Sure, I'll give you a number.
Yeah, sure. You can tell the IR also that they can contact us if the number is not readily available.
Sure, we'll share.
And do we look these as the margins of 28%? Do you think that we'll exceed these margins going forward once the capacity is fully commissioned?
So these existing margins are mostly coming from the the granite business. And as I just to reclarify, they will be in line. And to these, the new verticals which we just started quartz, the aspiration is to improve on those. And once you get to HMS, it will further improve.
Okay. Fine. It's too early to talk about your promoter holding because it's 77%. I'm sure that going forward you will find a way of reducing it. Great. If you can just send a investor presentation next time, it will be easier that we can actually look into a lot of. There will be a lot of representation of questions.
Yeah, we did it. It took a little time since it is our first call. It will get uploaded in the next 5-10 minutes post our call.
Oh, post the call. Okay. Fine. Thank you so much and all the very best. Yeah.
Thank you.
Thank you. Ladies and gentlemen, to answer questions from all participants, please restrict your questions to 2 per participant. The next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Thank you for the opportunity and congratulations on great set of numbers. My first question is on the quartz part. If I understand right, our first phase of the quartz capacity is 2 right? And second phase is coming up in 2027. Sorry, FY 27, right? If I understood it right.
So yes, so we have started production this quarter for the phase 1, and yes, somewhere in next 12 months we'll have the second phase commissioned.
Okay, sir. So what would be the asset turns on the capex that we have done on the quartz facility?
So in the phase 1 we did about 130 crore.
Oh yeah. So that is the capex cost, and what would be the asset turn on this?
Asset turn would be it will be 2 plus.
2 plus. Okay, and the phase 2 capex would be around?
Again, it's the same level, 125, 130 level.
Okay. So if I have to quantify this capex in terms of a volume figure, what would that number be like? Units or volume of quartz that can be manufactured?
Throughput capacity would be 3 lakh tons now and 3 lakh tons in the phase 2. and output is around 5 lakh plus tons.
Got it, sir. Got it. That's all from my side, sir. Thank you and all the best.
Thank you. The next question is from the line of Bhavya Shah from 3A Capital Services. Please go ahead.
Thank you, sir, for giving me the opportunity. So, I have few questions. Hello, am I audible?
Yes.
Yes. So, what is the capitalization for your different segments in H1 FY26? And capacity utilization of your segments?
Yeah, we just finished our phase 1 plant in Q2. A portion, around 70 crore is what we have capitalized, and there's some small amount billing is done. There's some small crore portion is to be added. That's still there in the CWIP. That will get capitalized now. But no, technically we can read these numbers as capitalized 100 plus crore so far.
And in terms of year-on-year growth on Q2 numbers, can you give us a split about Galaxy Granite of different product-wise split of your revenue?
Yeah, we will share those numbers. You can refer that from the PPT which we'll be uploading.
Okay. And the other question is, can you please throw some light on granite industry in India? If we talk with organized, unorganized, how much government support coming to this industry? Anything?
So government, in the sense, this is the fragmented industry with about 19 odd miners that are mining, and we are the largest, probably 6 times larger than the second largest granite producer. And we pay royalty to the government for our sales, and there is no government. This industry doesn't need any government support.
So you are now diversifying into rare earth minerals processing. So do you expect any PLI coming in this space?
Yeah, the idea is yes, the thought process has already started for PLI into this space, and hopefully in the next few months we think there will be a PLI. We expect a PLI, and hopefully maybe by Q1 next year we think it will be in place.
Okay. So I want to understand how you are.
Sorry to interrupt, sir, but I may request you to rejoin the question queue for follow-up questions.
Okay. Thank you.
Thank you. Thank you. The next question is from the line of Narayana from StepTrade Capital. Please go ahead.
Thank you, sir. Can you please elaborate about the use cases of monazite? Like where is this applied?
Sure. So monazite is a ore, it's a mineral, and monazite is the feedstock for rare earths. There are about 17 rare earths in the periodic table, and primarily each monazite deposit might contain different rare earths, and Indian East Coast and Sri Lanka have predominantly NdMcr, neodymium praseodymium. So from monazite, you extract these NdMcr, the rare earths, in the form of oxides, and that is the rare earth oxide, and that is the material we plan to produce in Sri Lanka. The applications per se, now somebody will take this oxide, make it into metal or alloy or permanent magnet. So the applications predominantly get into permanent magnet sector, wherever permanent magnet is being used. If you look at permanent magnet application, the considerable application is in the EV motor industry. It is used in EV motors. So there is a motor and then there is a permanent magnet in that motor which contains this ND oxide or PR oxide or other rare earth oxides. That constitutes the close to 26-28% of the global requirement of rare earth material or permanent magnet. The second, the other applications are defense. Then you also have a wind turbine, and you have BLDC motors which use it. MRIs use it. So the permanent magnets, rare earth permanent magnets have a lot of applications, and the only way to make them is through the rare earth materials.
Okay, thank you, sir. My next question is, sir, can you please explain the royalty structure you just mentioned in the previous answer? Like, what is how much percentage you need to pay to the government?
So royalty for granite is paid per volume base, cubic meter, and or in some cases weight based, tonnage basis. So the royalty differs from state to state. It can be as low as 8% to 11% if you 11% if you convert those numbers on today's value relation. And in terms of quads, it is percentage again, and it is single digit percentage. And in Sri Lanka, we'll be paying around 9% on the value of the material X mine.
Okay. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Shrishti from Step Trade Capital. Please go ahead.
Hello, sir. So actually, I wanted to ask that you have said you have improved your working capital days from 120 to 99, but as I can see in your balance sheet, your trade receivable is still quite high. So is there a particular reason for that?
Yeah. No,
you have 140 crore in your trade receivable pending right now.
Yeah, at a consolidated level, we are at 190 crore.
Yeah.
If you look at our past year consolidated number, it is close to 238 crore. So that's the reduction that we have done, and so going forward also this number will come down. See, on two fronts. One is basically, I'll tell you. We have credit terms with our exporters, which is initially when there was Corona, we have extended little better credit terms to them. I mean, that's 90 days, 120 days, but are backed by 100% LCs and advances. But now the things have stabilized. We are coming back from those days to again 45 to 60 days stuff. That is on one front, and second is the LC discounting is what we are doing without recourse.
Okay, so what is the current receivable day?
It's around 100 plus days.
Okay. And my next question was regarding the solar energy and the capex you are planning to do from IT to seat. What is the when will it be operational, and what is the cost saving you are hoping to get?
See, these are the plants that we are putting across our mines. We have a plant which is 1 megawatt plant which is up and operational, and now from the proceeds also a portion of money is going towards that. It is expected to be operational by end of next half of the year. That will be mostly within the surrounding our mine, and we will be using that electricity for our purposes. I mean, business purposes.
So what can you give me a number? Like what is it a?
I'll give you unit-wise picture. There's no unit rate in Andhra Pradesh where significant operations are happening is around 9 to 10 rupees per unit. And this would be close to 4.5 to 5 rupees is what we can, generate from the solar plant that we'll be putting up.
Okay. And what about the car, the trucks?
Yeah, trucks are the additional, you see today they are diesel-based trucks and those trucks will be completely EVs. I mean, the whole purpose of establishing these solar plants also to use those units for our internal consumption. These trucks on average, it will save about 20 lakhs per truck per annum is a rough estimate.
Okay. Okay. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, we will take that as our last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you everyone for joining us and hearing us out on first earnings call. We are always available to for any questions, and you can reach our IR out, and we'll be proactive in addressing any concerns or questions or doubts you may have. And thanks everyone for being on the call. Thank you.
Thank you. On behalf of Go India Advisors LLP, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.